So today on the podcast, I'm going to talk to you about these new campaign promises that are enacted in this bill. Okay. So no tax on tips, no tax on overtime, and then air quotes, no tax on Social Security, which isn't exactly true. Welcome to the Sunlight Tax Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, tax pro, author of Taxes for Humans, and the founder of Sunlight Tax. If you're a creative or wellness-oriented entrepreneur who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello. I hope you are soaking up these last moments of summer, or maybe school's started back up for your kids if you have them. And let's jump into this new tax bill. So just to orient you, on July 2nd, a massive, massive tax bill was passed. It's called the One Big Beautiful Bill Act, or OBBBA. I'm going to call it the B3 because that's a little easier to say. This tax bill is so big and there is so much in it that it's really not possible to unpack it in a single podcast episode. And yet, I think it's really, really important for you to understand what's inside it as a citizen, as a taxpayer, to know what you're going to get, how it's going to benefit you, how it might harm you. So this is something I've been doing on the podcast. And if you missed the first episode, 2 episodes back, if you go back into your podcast player feed and just go back 2 episodes, I did an overview episode about this new tax bill to just give you a sense of its overall impacts, the main thrust of the bill, kind of the big things that it does, not all of which affects individuals, but certainly affects our country. So definitely take a listen to that for the overview. Now, after that, I am breaking the bill down into bite-sized parts so that you can just, each week come back to the Sunlight Tax Podcast right here and just listen to one element of the bill. And so I'm trying to break them up by subject matter. Last week, I did cars and energy credits. I got that one out quickly because there's some expiring clean energy credits. If you have any plans to buy a new clean vehicle, it's a really good idea to do that before September 30th because you are still eligible until that date to get a big old tax credit, a Biden-era tax credit that got basically eliminated, gutted in this tax bill. But you can still slip in under the wire. So that was a very deadline important episode to get out. Today, I want to talk to you about the campaign promises in this bill, okay? There are several. Basically, the campaign promises that President Trump promised on the campaign trail and insisted went into this bill are no tax on tips, no tax on overtime, no tax on car loan interest. That I'm not going to talk about today because I talked about that last week. So for the new car loan interest deduction, see last week's episode. And finally, this one is a misnomer. No tax on Social Security. I'm using air quotes here. It's not possible or legal for them to change Social Security in any way in a bill like this, which is a reconciliation bill. And so that's actually not truly what happened, but what they did do. And it's a little upsetting that they actually had the Social Security Administration send out letters saying there's no tax on Social Security because that is not actually true. That is a denial of facts. However, what did happen and what is present in this bill is a new deduction, a higher standard deduction for seniors, basically people over age 65. Okay. Sorry, 65 and older. Okay. So today on the podcast, I'm going to talk to you about these new campaign promises that are enacted in this bill. Okay. So no tax on tips, no tax on overtime, and then air quotes, no tax on Social Security, which isn't exactly true. Okay. All right. So some quick facts. The B3 temporarily does enact some campaign promises All of these provisions I just mentioned expire in 2029. So you get them basically for 4 tax years, 2025, 2026, 2027, and 2028. That's it. Then they're done. Okay? So the senior deduction, the brand new, no tax on Social Security, big air quotes. What happened is there's a new deduction for seniors if you are age 65 and older. This is something you don't have to even remember or have knowledge of as you're filling out your taxes because your birth date goes onto your tax form, so it's automatically calculated. All right, so that's kind of a good news situation if you happen to be 65 plus. Grant you, most people who listen to this podcast are not, but if you are, if you're 65 and older with income under $75,000, or double that to $150,000 if you're married and filing joint as a couple, there's a temporary $6,000 deduction. Okay, it's essentially a higher standard deduction by $6,000. So that's going to benefit older people. All right, now let's talk about the meaty one, no tax on tips. All right. I'm going to talk at the end. I don't want to editorialize too much. I'm trying to stick to the facts as much as I can, but also I'm a tax expert and some things really matter to me about tax equity. And so I am going to talk about tax equity at the end. But let's just lay out the facts of this new no tax on tips provision. All right. So the B3 provides a temporary deduction of up to $25,000 for qualified tips received by a taxpayer in an occupation that customarily and regularly receives tips. So think servers, beauticians, people in the beauty or bodywork industries, people who normally get tips, okay? This change is likely to benefit higher income tipped workers, not the lowest income tipped workers, because the way that the standard deduction works is that if you make less income than the standard deduction, you don't owe taxes anyway. You don't owe any federal income tax. Okay, so this is a savings on your federal income tax, which you only owe if you're making above the standard deduction amount. Your tips have to be reported to get this deduction. So ding, ding, ding. If you are trying to do things under the table, first of all, I don't endorse that. That's not legal. But if your tips are going under the table, I just want to tell you, of course, you're not going to benefit from this no tax on tips provision, right? Because you're currently skirting the law. You're already avoiding all the taxes on it. So, of course, these tips have to be above board to get the deduction. All right. So they can be reported either on a W-2 or a 1099. So in other words, this tip deduction is good for employees as well as for contractors. Okay. So you don't have to be an employee to get the benefit. This deduction phases out when your modified adjusted gross income exceeds $150,000 if you're single, or $300,000 when you're married filing jointly, okay? Hey, real quick, I just want to pop in and tell you that my book, Taxes for Humans, is available for pre-order. When you pre-order, you get 2 massive bonuses. One is instant access to the first chapter, so you can be the first to dive in. The second free bonus is my money-saving on-demand class, IRS Proof Your Deductions, which normally sells for $97. Taxes for Humans is the funny, empowering, practical tax guide that will help you do your own taxes and make them easier every year. I took 2 years to make it a great, useful tax guide, the most useful you've ever seen, and your pre-order means the world to me. Go to sunlighttax.com/book to pre-order and get those bonuses. Again, that's sunlighttax.com/book. Now, the deduction is only good for your federal income tax. Your tip income is still subject to Medicare and Social Security tax, right? And Medicare and Social Security tax, if you're a listener of this podcast, you know this, that if you're self-employed, self-employment tax is what is paying into your Medicare and Social Security. And so you're either through a W-2 getting Medicare and Social Security withheld through your paycheck as an employee, or if you are a contractor, self-employed person, you're paying self-employment tax, which means you're still paying into Medicare and Social Security when you're self-employed. Okay, so you're only saving federal income tax on your tip income. Now, what's interesting is this law does apply to tax year 2025, right? This law was passed mid-year, right in the middle of the tax year, retroactive to January 1st, right? So no employer already had this set up, and we're all going to have to kind of scramble and go backwards with the paperwork part of it. Luckily, you, dear listener, do not have to worry about that part, but just so that you know, you may get some funky paperwork this year, and you want to hang on to it because that is going to be good for 2025 in this transition year. So when tax law gets written, there often are these provisions that are a little bit retroactive. And of course, we have to scramble to figure out how we're going to make that paperwork work when nobody, of course, had a crystal ball on January 1st, knowing that this bill would pass. So what it means is temporarily for tax year 2025, there's a transition rule that will allow employers to provide a statement enumerating a taxpayer's 2025 tips using, quote, any reasonable method. Okay. So if you are in a field that ordinarily gets tips, you're a massage therapist and you work at a spa, for example, you might just get a letter with your employer saying, I use this calculation and this person made this amount of tips. Okay. So look out for that letter. It will become a part of your tax documentation this year, and it'll be a little bit funky until 2026 when we get the paperwork requirements really locked in. All right. Only qualified tips are eligible for this deduction. So listen up, because I'm getting a lot of listener questions on this issue. A couple people have reached out on Instagram and email to me to ask me about this part. So this is for you. Only qualified tips are eligible for this deduction. This means you must receive tips in an occupation that regularly and customarily receive tips on or before December 31st, 2024. Listen up, because that's retroactive. That means if suddenly it becomes the norm for, I don't know what, car mechanics to receive tips starting now, I mean, who knows? It does feel like the world is trending that way. If it suddenly becomes customary moving forward for your field to get tips, but it didn't before the end of 2024, you still don't count here, okay? So also, you cannot be in what is called a specified service, trade, or business. In tax world, we are calling that an SSTB, okay? So what is a specified service, trade, or business? If you're in a specified service, trade, or business, this tip deduction does not apply to you. I'm sorry to tell you. So let me just tell you who is in that category of the SSTB. Now, this phrase may ring a little hint of a cobwebby bell for you, because in the first Trump tax law in 2017, the Tax Cuts and Jobs Act, there was a new provision extended in this legislation called the qualified business income deduction. That deduction is a little complicated, but the sort of overview is that 20% of your freelance income, of your business income, is deductible. Okay, that's cool. Most of us liked that, but it did not apply. There were some income threshold limits for that, and it did not apply to people in a specified service, trade, or business. Okay, so there was this carve out where those of us in these special areas were not eligible for the QBI deduction, the qualified business income deduction. So if that phrase is ringing a bell, that's why. It's the same list of people who are ineligible. So I'm just going to read you some explanation off the IRS website. I always like to go to the IRS directly when I can, because that's the mothership. So these are the areas that are specified service, trade, or businesses, and therefore not eligible for this tip deduction. All right. The fields of health, law, accounting, actuarial science, performing arts, consulting, that's broad, I know, athletics, financial services, brokerage services, investing and investment management, trading or dealing in securities, partnership interest, commodities, or any trade or business where the principal asset is the reputation or skill of one or more of its employees or owners, as demonstrated by receiving fees, compensation, or other income for endorsing products or services, licensing or receiving fees, compensation, or other income for the use of the taxpayer's image, likeness, name, signature, voice, trademark, or any other symbols associated with that individual's identity, or receiving fees, compensation, or other income for appearing at an event or on radio, television, or another media format. Okay? So that's a mouthful, but just think about if you are, and many people are in this world, operating with a personal brand. A personal brand almost by definition fits this. If you are, my business coach is Lisa Zahia. Her coaching brand is Lisa Zahia. It's her name. Like the business is her, right? So she's going to very definitely fit into this category that is not eligible for the tip deduction. She's probably not too worried about that because coaches typically are not getting tips anyway. And so she already wasn't eligible. But that's the kind of, business based on a personality or likeness, right? A podcast host could easily fall into this category as well, especially a podcast host where your name is on the podcast, right? I might be able to get away with it. The Sunlight Tax podcast could potentially have someone else within Sunlight Tax inside, maybe. But, like the Huberman podcast is Huberman. Like that's it. There's nobody else, right? Okay. So I hope that just clarifies that SSTB category of people who are not eligible for the tip deduction. Okay. So here's a real life example that someone wrote in to me to ask about. So just to kind of help you think through whether this tip income deduction applies to you or not. Someone wrote to me who is a freelance writer, and he's self-publishing a book on a publishing payment platform that allows for tipping, right? So there's a tip option when you pay for his book. Now, he asked if he is qualified here. Now, writers are not in a field that is regularly and customarily receiving tips. And so for that reason, my interpretation of this law says no, that his tips are going to be subject to taxes and not eligible for this deduction. Okay. Now, as a counterexample, if you are a massage therapist, a hairstylist, a bartender, all of those groups I would say are eligible for this tip deduction. Okay. Now, I'm going to give you a little bit of tax equity commentary on this particular provision in this tax bill. The very reason that we have tax experts write tax law and not politicians, especially not politicians who are throwing out promises on the campaign trail. I think we all know that that is subject to, the particular needs of winning the state of Nevada, which I believe is where this tip income one came from. Trump made that promise when he was campaigning in Nevada. So a basic principle of tax equity, if you study tax legislation, tax law writing at all, the first principle of tax equity is that taxpayers in a similar position should be treated the same under the law. This no tax on tips law is really terrible legislation. It's terrible tax law because it violates this single foremost important tax equity position. Okay. So why on earth should a good-looking server at the front of a restaurant, right, who's doing like face-to-face with the customer and getting tips, why on earth should that person get this deduction when the people sweating in the hot kitchen, dishwashers, prep cooks, why should they not get this deduction, right? These are people functionally doing very similar work in a similar environment, being paid similar amounts of money. One gets the deduction and the other does not. Why should teachers not get a benefit, right? Tipped workers are a small fraction of the working population. Why should just this tiny little group get a benefit that, teachers, truck drivers do not get, right? So this particular provision really violates tax equity principles. And for that reason, I think it sucks. But you know what? If you are a tipped worker, if you're a bartender, a massage therapist, please, take the deduction, enjoy it for the 4 years that you have it. But this is the reason that we want, I know it's an anti-expert era that we're living in right now, but this is the whole reason that it actually matters that people who study and care about equity actually write the laws. All right, last but not least, the last campaign promise I want to talk to you about today is no tax on overtime. Now, this was another campaign promise. It's also good for 4 years. It's good until 2029. It's more straightforward than the tipping. So up to $12,500 if you're single, or $25,000 married filing joint of your overtime pay is deductible for qualified overtime compensation received during a tax year. Okay? This deduction phases out when your income exceeds $150,000 if you're single, or $300,000 when you're married filing jointly. This is a rule, one of many, where if you are married filing separately, you don't get the deduction. There's a lot of places in the tax code like this. This is one of the benefits of filing a joint tax return, just in general. Your overtime pay to get this must be reported separately. In other words, not lumped in with all your other pay. So overtime has to be separately reported on your W-2 or 1099. It's okay to be a contractor, to be self-employed. You're still eligible for this overtime benefit. And also just to let you know that your overtime pay, this deduction saves you money on federal income tax, but you're still going to be paying Medicare and Social Security on those earnings, okay? The savings is just on federal income tax. Okay, that is all I've got for you today. That was plenty, I think. I hope you can digest that. Certainly send me your questions. You can send me a DM on Instagram at Sunlight Tax. You can also send me an email if you have questions or if there are things you want me to cover about this bill coming up. I'm keeping a list of those and, as you can see, trying to integrate them into the episodes. So you can reach out to hello@sunlighttax.com. Keep it civil, keep it kind, keep it fact-based, please. And thank you. And if you found this episode valuable, if you have a friend who gets overtime or is tipped or is over age 65, would you share this episode with them? I am so grateful for your shares. It is the only way this podcast grows. All right. I will see you on the next one, everybody. Have a great week. Bye. Thank you for listening. If you like the show, please be sure to subscribe, leave a review, and share it with a friend. It really helps. I'm so grateful. My tax guide, Taxes for Humans, is available for pre-order at sunlighttax.com/book. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.